Good morning. You're watching Market Cafe with me, Shreyansi Singh and Snehi Shah on ET Now. And over the next 1 hour, we will take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are flagging as well. So Snehi, first up, let's get started with the international handover. What does it look like to you?
Well, it's really bad. Like a very negative day coming from Wall Street today. At least Wall Street is coming off a losing session for the major benchmarks after sticky inflation data from last week as well as some strong economic data had investors concerned that the Fed Reserve will take longer to cut interest rates. Treasury yields spiked with the rate on the 10-year note touching its highest level since November. Oil prices also rose to 5-month highs. On Tuesday, the 30 stock Dow dropped nearly 400 points intraday or a whole 1%. S&P 500 also lost 0.7%. Nasdaq also tumbled nearly 1%. So, sharp cuts coming in for the US markets. Still, some market observers remain optimistic about the overall equity market, saying stocks are due for some consolidation after quite the strong start to the year. The S&P 500 is coming off its best first quarter since 2019, and while today investors will also get more insight into the labor market with the ADP private payrolls report, which comes ahead of the March reports data. Remember, that is due on Friday. Now, the ISM services index is set to release after market open today, according to US times, of course. And Fed Reserve Chair Jerome Powell is also set to speak, as is a slew of other central bank speakers, including Governors Michelle Bowman and Adriana Kugler. Chicago Fed President Austin Goolsbee and Fed Vice Chair for Supervision Michael Barr will also be speaking at events. On the earnings front, then Levi Strauss will be reporting after the closing as well. So, while some sharp cuts coming in from the US market, but with that, let's also take a look at what's happening across the European markets. And it's just mirroring what Wall Street has done. Sharp cuts coming in across European markets as well. DAX down more than 1.1%, FTSE down 0.2%, and the overall stock 600 also down 0.8%. So, while rather negative handover coming in from international markets, Shreyansi, let's see how that pans out for us. But with that, also take us through what gold has done, what oil has done, because on one side equities are down, but I'm sure both of these, commodities are up and away.
Absolutely up. And up and away is an understatement right now when
Absolutely.
I'm looking at gold and oil. So starting off with gold then, gold scaled yet another record peak. And that was as traders snapped up the safe haven asset amid growing Middle East tensions. Now, largely ignoring a stronger dollar and tempered bets for US rate cuts, the mix of bullish tailwinds has driven bullion nearly 10% higher so far this year, and those are the kind of moves that we've seen coming in for gold on a daily basis and also on a yearly basis. But when I'm looking at oil, then oil prices extended gains on Wednesday, and that was also larger than expected fall in US crude inventories as well as escalating geopolitical tensions raised investor worries about tighter supplies. So when I'm looking at Brent futures, there's a rise coming in of about 0.2%, and they hovered around the $89 per barrel mark. Now, when I'm looking at US WTI as well, that contract also was doing pretty well, and it was also up 0.2% around that $85 a barrel mark. Both Brent and WTI had climbed to its highest since October on the previous day. So those are the kind of moves that we've seen coming in for this particular commodity. Now, in fact, let's also get in Somi to tell us what's driving this surge in crude prices as well.
Well, if you see, Brent crude touched around $89.3 per barrel yesterday in trade, which is the highest level that we have seen for Brent crude since October 30th, 2023. In fact, from 2024 lows, if you see, Brent crude prices have moved up nearly 19%, just 1% away from being actually in a bull market for Brent crude. Now, why this sudden rise that we have been seeing in the Brent oil prices? And that is because there's fresh supply threats that is coming in owing to the conflicts that we have been seeing in the Middle East. Apart from that, Ukrainian drone attacks have also drone attacks in the Russian oil refinery have also renewed supply issues in the market, and that's the reason why Brent crude has been gaining in trade. Now, what would be the impact of this on Indian companies? Well, it will be majorly negative coming in for the oil marketing companies, given the fact that recently they had reduced their marketing margin by around 2 odd rupees on both petrol and diesel, and given the fact that oil prices rising. This would further hurt their marketing margins going forward. Now, before they had taken a cut of 2 rupees a pet, they were earning a marketing margin of around 7.4 rupees on petrol, which has come down to now less than 3.5 rupees, and on diesel they were earning around 3.4 rupees per litre, which has now reduced to less than 1 rupee for the oil marketing companies. And generally every 0.5 rupees per litre drop when it comes to the retail fuel marketing margin impacts Indian Oil Corporation, BPCL and HPCL's EBITDA by around 7 to 11 odd %. Apart from this, we have also been seeing a continuous drop when it comes to the Singapore gross refining margin, which is the Asian benchmark for GRMs from January highs of around $8.7 per barrel. It has now come down to $4.2 per barrel, which is a drop of almost 50 odd % from its high, and generally $1 per barrel drop in the gross refining margin impacts MRPL's EBITDA by around 1,000 odd crore rupees. For Chennai Petro, it lowers their EPS by around 30 odd % for Indian Oil Corporation, BPCL and HPCL. It reduces their earnings by around 14 to 16%, and for Reliance Industries, if you see, it impacts their consolidated earnings by around 4 to 5 odd %. So keep an eye out this oil marketing and oil refining space, given the fact that oil prices are on a rise and gross refining margins have also been continuously declining.
Right, Swami, well, thanks so much for taking us through that. We will be watching out very closely on all the oil marketing companies as well. But let's get a move on then, and let's put the spotlight on a commentary from the Fed Reserve officials. Cleveland Fed President Loretta Mester continues to expect the central bank to start policy easing as soon as June if macro data allows it. As for the pace of that action, it could occur gradually if the economy meets the forecast, she added. Mester also cautioned that to pave the way for an easing in the stance of monetary policy, she needs to see upcoming inflation data meet her forecast of further declines.
And shifting focus to some stock-specific action then, Tesla shares took a hit after the company reported a decline in vehicle deliveries in the first quarter. Remember, this is the first annual decline since 2020, since of course the pandemic hit. Tesla recorded a 8.5% decline in deliveries. Meanwhile, its Chinese counterpart BYD's sales have also fallen a whopping 43% sequentially, handing back the world's biggest EV seller title to Tesla. However, Tesla taking back the sales crown illustrates its global clout will not be easily challenged, especially as both companies expect a slowdown in Chinese EV sales growth this year.
Well, moving on then, let's talk about another stock that has taken a sharp cut, and Intel shares took in a steep hit in extended trading after company revealed long-awaited financials for its semiconductor manufacturing business, commonly called the foundry business. This is the first time that Intel has disclosed how much its foundry business makes in sales, and the company said its foundry business recorded an operating loss of $7 billion in 2023 on sales of $18.9 billion.
And some distressing news coming in from Taiwan, where a 7.5 magnitude earthquake has struck the island. The seismic event recorded prompted tsunami warnings for the island as well as parts of southern Japan as well. The earthquake has left numerous buildings in ruins amid reports of massive damage in the region. Rescue operations are underway. The exact extent of the damages are yet to be ascertained. In Taiwan, train services have suspended with immediate effect. Meanwhile, the Japanese meteorological agency has forecasted a tsunami of up to 3 meters for the island group of Okinawa.
Alright, well, let's get a move on and also take a look at how the Asian markets have opened up this morning, and well, steep cuts coming in across this market as well, because after a mixed session, markets are falling and markets are watching for moves in electric vehicle makers. Like we told you earlier, Chinese EV maker BYD said its first quarter sales plunged 43% on a QoQ basis, and investors will also be monitoring data on China's service sector. But on the back of that, Hang Seng is down 85 points, roughly 0.5% downtick coming in for Hang Seng. Let's also take a look at what Shanghai is doing, because if Hang Seng is slightly lower, we'll also get Shanghai for you on the screen shortly. But what's important to know is, like we just mentioned, the 7.5 magnitude earthquake has hit Taiwan, and on the note of that, Japan has also issued a tsunami alert. Now, Nikkei is down over 1.3% on open. At least it was 1.3% lower when the day started. It is still, with a sharp cut, trading with a sharp loss. 1% downtick, or a 430-point cut coming in for Nikkei as well. Korea then, South Korea's Kospi also slipped 8 of a percent, has extended those cuts. In fact, it has doubled those cuts because it's now trading with a loss of almost 1.5%, so a 38-point cut coming in over there as well. Australia also, well, not a different scene when it comes to Australia. Quite the negative view over there as well, because ASX 200 fell 0.7%, has extended those losses, is down 1% as we speak, extending its decline from the previous session. Now, when we take a look at where we ended yesterday, where the Indian markets closed, Nifty managed to close above the 22,450 level, but just nominally, because we held on to those levels by at 22,453, implied at 22,499. So on a spot basis also, well, not much happening. On a futures basis, a rather tempered start is what is indicated for us. 0.3% lower on a futures basis is what implied open is indicating for us. And do remember, we have quite negative handover coming in from global equity markets, so we'll just have to wait and watch out and see how this pans out for our markets today.
Absolutely. Let's see how that pans out for us. But moving on then, let's take a look at the jam-packed lineup that we have for you on the market. At 9:20, we'll be in conversation with Vetri Subramaniam, CIO at UTI AMC, to talk about the markets and more. And at 9:35, we'll also be in conversation with Warren Harris, CEO and MD at Tata Technologies, to talk about the mega joint venture with BMW. And to discuss the growth roadmap of all cargo logistics, at 9:45, we'd be in conversation with Ravi Jakar, the Chief Strategy Officer at the company. At 10 a.m., we'd also be in conversation with Vinod Agarwal, MD and CEO VECV, to talk about the robust March dispatches. And at 10:20, then, we'd also be in conversation with Rakesh Arora, Go India Stocks, to talk about metals and what's happening with that particular space as well.
Pack lineup for you in terms of market guests and managements, but with that, viewers, here's the news for the hearing in.
Welcome back. Thank you so much for staying tuned in. Let's get you some more news and updates then. The Power Ministry has taken stock of the supply situation in the country and announced certain steps to ensure preparedness for the summer season on the back of soaring demand. Prakash Priyadarshi has more details. Prakash, tell us a little bit about all of these measures that were announced as well.
The Power Ministry has held an important meeting with all stakeholders on power supply situation in the country. Various important decisions have been taken by the government in order to ensure sufficient availability of power and avoid power outages during summer season. To begin with, Power Ministry has decided to extend Section 11 of the Electricity Act till September 2024 for imported coal-based power plant. That means power plant using imported coal will have to operate at full capacity till September 2024, a very significant development coming in. Along with that, generation companies would be allowed to sell surplus power through power exchanges. When it comes to gas-based power plant, the government has decided to operationalize some gas-based power plant, especially during crunch period, in order to ensure sufficient availability of power in the market. And the Power Ministry is also contemplating to invoke Section 11 in the context of gas-based power plant as well. A very significant development, especially in a given circumstances. In addition to that, all the states and independent power producers have clearly been instructed by the Power Ministry to avoid planned maintenance of power plant at this point of time, and that will be shifted to monsoon season. Along with that, generation companies have been instructed to review actual status of around 5200 megawatt capacity of non-operational power plants, and if there is feasibility, these power plants would be operationalized as soon as possible. The government has also decided to commission some new projects in order to add more capacity going forward, and in case of captive power generation plants, surplus power would be utilized during current summer season. These efforts are being made to ensure sufficient availability of power and avoid power shortage situation, as peak hour power demand is likely to cross 250 gigawatt during current summer season.
Well, Prakash, thanks so much for bringing us that very important update for us. We'll be watching out closely on the power pack of stocks today. But let's keep it with this theme. More power is going to be required because it's going to be a warmer summer for 2024, as the IMD has forecasted a scorching summer led by prolonged heat waves, which in other way is a booster to the consumer durable space. As Nilesh Gupta, MD of Vijay Sales, says that expecting a healthy set of growth this year. And we also had the spokesperson from IMD come and talk about what this summer is going to look like for India. So listen into what both of them had to say.
Now, this year, as per the IMD multi-model coupled model forecast, it shows that most parts of the country are likely to experience above normal temperature during the season, April to June, as well as April, except a few areas of Northeast and some pockets of Northern Northwest India and along the West Coast. Otherwise, almost all parts of the country we are likely to get above normal, both maximum as well as minimum temperatures. Once we say that this is being an El Nino year, generally El Nino year it has been seen that we get above normal temperature. So when you have a temperatures are likely to be above normal, we also likely to experience above normal heat wave days over most parts of the country.
I think this year we are in for a good summer sales. So what we expect is this year, the way things are spanning out, the way prediction is there for heat waves to be of 15 to 20 days, we should see an upward of at least 20% growth this year over last year. And if things fall in place, it could be a little more also. And for the first time in so many years, I'm feeling if this is what is going to happen, then possibly during the fag end or maybe a little more, we may see some shortages also happening of these cooling products.
Well, that was the word coming in from IMD and the MD of Vijay Sales. Onto an ET Now exclusive then, global money manager Invesco is exploring various options to sell an equity stake in Invesco Asset Management India, including exiting its investment in the local unit. Anurag Joshi standing by with all of those details. Anurag, tell us a little more about this development then.
Invesco Limited, which is the Atlanta-based global money managers, is looking at various options of selling an equity stake in Invesco Asset Management India, which is the local unit. And these options and possibilities include a complete exit and the sale of the entire shareholding in Invesco India, to offering a controlling equity stake, and also there's a possibility of offering a minority equity stake in the company. Now, Invesco Hong Kong, which is an entity controlled by Invesco Limited, that is owning a 100% equity stake in Invesco India. And Invesco Asset Management is the investment manager for Invesco Mutual Fund, which has an asset base of about 75,000 crores rupees in India.
All right, let's get a move on from then. And SEBI chairperson Madhvi Puri Buch explains why the Indian markets are so commanding at the CII Corporate Governance Summit. Listen into what she says, as she believes that the valuations in the current market are justified. Let's listen into why she thinks so.
Why is it that our markets are commanding? And this is, I think, an achievement for each person in this room, because you are the ones who are commanding this price to earning multiple, which is higher than not only the averages of the world indices, but you can see there the comparison with various nations. So at 22.2, yes, some people say we are an expensive market, but still, why is the investment coming? Because this is a reflection of the optimism and the trust and faith that the world has in India today, that we are commanding these kind of multiples in our markets.
All right, time for a quick break then, but when we come back, we'll take a look at some stock-specific news.
Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. You're still watching ET Now. Let's take a look at all the stocks that will be abuzz in today's trading session. And well, the first set of stocks that I'm going to be talking about will be abuzz on the back of their QIP updates rolling in respectively. Now, JSW Energy will be in focus because their 5,000 crore rupee QIP issue has opened at an indicative price of 485 rupees per share. The stock yesterday closed at 541, so it's a rather, like a slight bit of a discount at which offering their QIP. Moving on, let's also talk about Angel One, because their QIP has closed and they have raised 1500 crore in their QIP, and the allottees for these QIP include Goldman Sachs, Aditya Birla Sun Life Mutual Fund and Motilal Oswal Mutual Fund as well. And well, let's also take a look at Chalet Hotels, because they have also gone ahead and raised 1,000 crore rupees in their QIP, and the QIP allottees for Chalet Hotels include Capital Group, SBI Mutual Fund as well as ICICI Pru Mutual Fund. But Shayanti, this is on the back of their QIP updates. Tell us about other stocks that could be abuzz in today's trading session on the back of their individual news flows.
Absolutely. So except the 3 QIP updates that we talked about, when I'm looking at my list, there's India Bulls Real Estate. They have a board meet on April 5th to consider raising of funds by way of debt, equity or any other equity linked or convertible securities. So that one will remain in focus, and so will Anupam Rasayan. They signed a LOI with a Japanese multinational for 743 crores contract over 7 years to supply chemical intermediates using fluorination chemistry. Now another one on my list is Suntec Realty as well. They expanded annuity income business in BKC, and the targets that they have for this are very ambitious. They're looking at generating a revenue of close to 2,000 crores over 29 years. So on the back of that, Suntec Realty will also remain in focus then.
Well, absolutely, and let's shift focus from the secondary markets to the primary one, because other than the listing of SRM contractors today, that stock will be making its debut on D Street. Another pure play telecom operator will be launching its IPO today, and that is Bharti Hexacom, which is held jointly by Bharti Airtel and the Government of India. Now, what does this mean for Bharti Airtel going ahead? Soumit is joining us with all of those details. Soumit, take it away.
Well, it's a big telecom IPO coming in the market. In fact, one that we are seeing for a pure play telecom company coming in right from 2007 till now. There has been not even a single pure play telecom company coming out with an IPO, and today Bharti Hexacom's IPO is launching and it will remain open till April 5th. The price band for this IPO has been set by the government at around 542 to 570 rupees, and the government of India is looking to offload close to 7.5 crore shares and are looking to raise close to 4,275 crore rupees from this listing. Now the company's potential market capitalization on the upper end of the price band would be around 28,500 rupees, 28,500 crore rupees. Now Bharti Airtel owns around 70% of its stake in this company, while the remaining 30% is owned by the government of India. Now Bharti Hexacom is a licensed telecom operator in only 2 out of the 22 circles in India, that is Rajasthan and in Northeast. Northeast includes the states of Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland and Tripura. Now currently the company operates under Airtel brand name, and hence they also have to pay brand fees and corporate overheads such as which form around 7% of the revenue. The company owns around 20% of its towers, while the remaining 80% of the towers are leased. It does not own any fiber assets, while all the fiber assets of the company are leased from Bharti Airtel. Also, if you know, for your information, the fact that the company does not own any spectrum, because all of its spectrum are valid till 2030 till 2042. Now comparing Bharti Hexacom to any other telecom operator won't be correct, given the fact that all the other telecom operators are pan-India basis, while Bharti Hexacom is present in just 2 circles. But just to give some perspective, in the last 3 or 5 years, if you see, Bharti Hexacom has grown at a much faster rate compared to that of Bharti Airtel, but that is also because of lower base. The company's leverage remains largely at par with what Bharti Airtel's leverage ratio is. ARPU, however, is on the smaller side because the penetration level of mobile and as well as 4G is lower in Rajasthan and the Northeast circle. Now when it comes to valuations, Bharti Hexacom EV to FY24 EBITDA, if you see, is at around 10.9 times, which is at a premium or largely at par with Bharti Airtel. But if you see the FY26 valuation, they are at a discount of around 10 to 15% compared to Bharti Airtel. Now what it means for an investor investing in Bharti Hexacom? Well, it offers yet another concentrated telecom play to investors. Unlike Airtel, Vodafone, Idea, Jio, Bharti Hexacom is focused in only 2 circles, but yet another telecom play for investors. But what it means for Bharti Airtel? Well, largely nothing, because the market capitalization or the value of Bharti Airtel's stake in Bharti Hexacom would be around 20,000 crore rupees, which is nearly 3% of its current market capitalization, which is largely at par with what the investors have been valuing this company. And given the fact that Airtel is not selling any stake, neither diluting any stake, there won't be any impact on Bharti Airtel from this listing of Bharti Hexacom.
Absolutely. Thanks, Soumit. So we'll keep an eye on Bharti Hexacom IPO. But moving on then, let's look at some business updates now for both Q4 and FY24, the likes of Dhanlakshmi Bank, V2 Retail as well. Ashesha is joining in with all of those updates.
Well, yes, first up, let's talk about Dhanlakshmi Bank, where deposits have seen a solid growth of about 7% on a year-on-year basis. Advances, meanwhile, have seen an uptick of 6% on a year-on-year basis, but all in all, it has rather been a weak set of operational data. So keep an eye out on Dhanlakshmi Bank on the back of these operational updates for the quarter gone by. V2 Retail, meanwhile, has reported strong set of data, where standalone revenues have come in at 295 crores, which is an uptick of about 53% on a year-on-year basis, and SSSG growth has come in at solid 40% for the quarter gone by. So very strong set of operational data. Keep an eye out on V2 Retail as well. Moving on to Hindustan Zinc, where the company has reported highest ever quarterly metal production for the quarter gone by, which is an uptick of 6% on a sequential basis. Credo, meanwhile, has reported weak set of Q4 updates, where SSSG has remained rather flattish on a year-on-year basis, and in FY25 company aspires to achieve mid-teens revenue growth, but largely weak set of numbers, operational data that has come in from Credo. Keep an eye out on this counter as well. Moving on to a couple of others then, where Nalco has reported data for the full year FY24, where it has achieved highest ever aluminium and bauxite production, and it has also achieved 101.5% capacity utilization. MOIL, meanwhile, for FY24 production has risen by 35%, and sales also reported a solid uptick of about 30%. Lastly, we had one counter which reported its results for the fourth quarter FY24, and which is Pratap Snacks, a recently listed entity. In fact, it was Q3 results that the company reported, recently listed entity, where revenues have largely remained flat. They came in at about 1.2% growth on a year-on-year basis. As far as margins are concerned, they stood at 9.6% versus 16% that the company had reported same time last year. So on a year-on-year basis, margins have rather been weak, and across the board, numbers have also been weak. Keep an eye out on Gopal Snacks, a recently listed entity. All right, Ashesha, thanks so much for taking us through all of those updates. We'll be watching out for all of these stocks in today's trading session. But while you're with us, Ashesha, take us through what brokerages are flagging off this morning. And I believe IT is the pick across brokerages. So tell us what's happening. Well, absolutely. Let's start off with IT sector, and CLSA has come out with a note where they've upgraded several of these counters. For TCS, they've upgraded the counter to underperform from their earlier sell rating, and they've now revised their target price to 4,043 rupees per share. As far as HCL Tech is concerned, for HCL Tech also they've upgraded the to underperform from their earlier sell rating with a target of 1553. TechM, they've cut target price on Tech Mahindra from 1518 to 1508, a marginal target price reduction coming in for TechM. As far as LTI, Mindtree and Infosys is concerned, they've gone ahead and cut their target price for both these counters. They say amid macro uncertainty, IT companies could guide conservatively in forthcoming earnings season. Unchanged outlook for key verticals like bank, retail, high-tech and telecom is what makes them slightly bearish on this counter. So CLSA has come out with a report on all these IT companies. Moving on to Tata Technologies then, remember the stock was surging yesterday on the back of that partnership with BMW Group, and on the back of that we have a JP Morgan report that has come in where they are maintaining their underweight stance on the stock with a target price of 800. They say that the joint venture with BMW is a step in the right direction. They still await clarity on a lot of factors with respect to accounting and margin profile of what the joint venture could look like. India continues to remain an attractive location for ER&D outsourcing, but they remain underweight because they believe that the valuations are excessive. So for now, they are maintaining underweight stance with a target price of 800. So Tata Technologies in focus on the back of this JP Morgan report. Moving on to Jubilant Food then, where Bank of America Securities has upgraded the stock to buy from their earlier neutral rating with a target price of 555. They say that the stock has corrected quite a bit, and hence they have upgraded the stock to buy. Further deterioration in business trends is highly unlikely is what they believe, and they say that the company continues to invest through investments. So they've upgraded the stock to buy from their earlier neutral, and the revised target price now stands at 555 per share.
Thanks, Ashesha. So that's the word coming in from brokerages then. But moving on, channel check suggests that chemicals have seen some price changes on a month-on-month basis. What will be the impact on the chemical stocks? Sharad is joining in with the answer and more details. Sharad.
Important updates coming from the chemical space, especially on the pricing checks for the month of March. We have seen for acetic acid, it's down almost 5% on a month-on-month basis, but this is negative for GNFC, while on the positive for Lakshmi Organics or Jubilant Ingrevia. Also, caustic soda, the prices have increased by more than 10%, almost 13% coming in, but it's negative for companies as Deepak Nitrite, JNFC, JSFC, while positive for Grasim and DCM Shriram. Soda ash, important component, that's down almost 13% on month-on-month basis, and it's negative for Tata Chemicals, but the India prices are actually, if you look at it, disconnected with China. Phenol and acetone is also down, which is negative for Deepak Nitrite, while palm kernel oil, that's up almost 17%, and this is actually negative coming for Galaxy Surfactants, while fluorspar, if you look at it, that has increased and is positive for Navin SRF and even Gujarat Fluoro. TDI, which is the toluene spread, that has contracted almost 13% on a month-on-month basis, and it's negative for GNFC, while the benzene caprolactam spread, that actually come down almost 25%, and that's a large amount, and this is negative coming in for GSFC. Lastly, ethyl acetate or acetic acid with the ethanol spread, that has contracted 35% month-on-month basis. Large contractions happening, and it's negative for GNFC, Jubilant Ingrevia and Lakshmi Organics. So these are the important chemical stock movements in the prices and their impacts on the respective companies.
Thanks so much for taking us through that. The chemical pack will be in focus as well, but let's move on to an ET Now exclusive now, and we learn from reliable sources that rate rationalization under GST is the priority for the new government. For more on this, we're being joined by my colleague Prakash Priyadashi. Prakash, good morning. Take it.
Yes, we are learning from our sources that comprehensive rate rationalization under GST is likely to be on top of the agenda for the new government and the GST Council in the financial year 2025. Sources are informing that the reconstituted GOM on rate rationalization likely to hold its first meeting soon after the Lok Sabha election. Sources are informing that some important proposals are there that is going to be considered by the group of ministers. Along with that, sources are informing that the mega rate rationalizations has been planned under GST in order to increase overall GST collections going forward. We also given to understand that a measure of some slabs are also being chalked out, primarily 12% and 18% slab likely to be merged. However, there is least possibility to tweak 28% GST slab it holds, primarily sin goods and luxury items. Along with that, sources are also informing that the compliance-related reforms, along with that process simplification, would be a priority for the GST Council going forward. Finance Ministry has set a target to achieve average monthly GST collection of rupees 1.9 to 2 lakh crore on back of multiple reforms measures that has been taken along with the proposed rate rationalization going forward.
Well, thanks Prakash for all of those details. Moving on then, let's get the thematic picture a little bit more sorted. Does the volatility in the market warrant caution, or is this a temporary blip? And where should investors then park their funds? What are the key themes and stocks to watch out for? Let's hear out views coming in from Vikas Khemani, Prashant Khemka and Dinshaw Irani.
Pharma industry, let's take for example, the total industry size is about $50 billion. Total market cap today is $200 billion. This $200 billion in last 20 years has grown at 18x, right? And many companies in that period has become 100x and 200x. So a sectoral growth wealth has got. This $50 billion, by the time Amrit Kal ends, will become $450 billion. It means pharma itself would have a market cap of $2 trillion.
Asset management companies also we continue to evaluate. At this point, I'm not sure that we have any one of those in the AMC portfolios. Certainly in offshore portfolios as of now, we have very limited exposure to the asset management space. But we do have distribution companies, wealth management companies, as well as some of these other intermediaries which service the asset managers and wealth managers.
There are certain pockets within like tourism, hotels and tourism, which looks very exciting to us. And I think that is a space where we may have increased our weight in the interim as such. So that's why overall there may be some replacement happening there. But that's a space that we remain fairly bullish on.
All right, so that's about the themes that you should keep an eye on. But moving on then, we also caught up with Ravi Dharamshi, CIO at ValueQuest Investment Advisors. Listen into his take on the market's upcoming elections and the rally in the PSU pack?
How do you assess the market right now? FY24 has been nothing short of a year of grand returns. Are gains likely to extend themselves? They may be lower, but are we in for a positive year? Are we in for another positive year?
I think it will be a tale of two halves for sure. First half is likely to be positive, and we clearly awaiting two big events, which is one is election and other is interest rate, and in two different geographies. India rate cut as well as election results most likely to be positive for the market, but in US that's where the joker in the pack lies. Interest rate cut might still go ahead as planned, but the election might throw up a surprise, and that can lead to some kind of volatility in the market. So I think that is what we are looking at. Currently, the positive momentum continues, but second half can see some volatility.
And why do you think second half will see volatility? Is it because of US elections?
Yes, US election is the key over here. And once all these events are also out of the, kind of markets have kind of factored that in, then we will probably be back to looking at the earnings, and that can actually throw up some negative surprises also, because not everything is firing in full cylinder as one would expect.
Everything is not firing full cylinders. What exactly are we referring to?
So clearly the rural consumer is not yet, doing very well. The discretionary consumption at the bottom of the pyramid is not doing very well. Exports are not that strong. So those are the areas of concern from the larger macro point of view. However, that's where the opportunity also lies. Markets have recognized that these are the problem areas, and that's why these stocks have not been performing since last 2 years or so. So that's where the opportunity lies if there was to be a revival. But I think this entire rotation in the market, the current recovery is totally investment led, and that too government capex led. So that changing from handing over the baton from the government led capex to private led capex will happen this year. Also, maybe some amount of at the market change of guard will happen from investment led theme to consumption led theme towards the end of the year.
While we spoke about US elections and global interest rates, we've got a local election, which everybody is saying is almost like a no event right now. But after that, we have a budget. So do you think rather than elections, we should focus on budget, and that could be an element of volatility coming because of that?
No, I think just as much as election is a non-event, I think budget is pretty much a non-event as well. It's been pretty well laid out. What are the priority areas for this government? How is this government going to approach? They are trying to push the envelope on the investment side, but I think incrementally from this point on, their ability to push more investments is limited. So they need the private sector to kind of fill in the gap over there. So I don't think even budget can throw up any kind of a surprise which none of us has ever thought about.
So like a deep and a very shaky sell-off in mid and small cap stocks in the month of March. Do you think the froth in the mid and the small cap space is over? Markets have now adjusted?
So first of all, I would say the froth is a strong word, but if you were to say that word, it is more in the SME space than in the mid and small cap space. The degree of euphoria or bullishness varies from space to space. So SME has the maximum, kind of froth over there, which has kind of corrected itself due to the regulatory nudge, and I think it was more definitely required. But mid and small cap, you can say, are probably a standard deviation above its long-term average, which makes it on the expensive side, but I won't call it so to say a euphoria or bubble. That's too harsh a term in my opinion. And on the other hand, the large cap space is definitely looking attractive. So I think we have the entire gamut, entire spectrum available in the market. I won't be worried about a small spot in the market being a little frothy, because that would be like tail wagging the dog.
Ravi, a lot of market experts are maintaining that PSUs were the leaders and PSUs will be the leaders, and by all PSUs on decline. As a house, how have you approached the PSU stocks?
See, our approach has been very, very clear. First of all, PSU is a basket that is defined by the market. We don't look at government-owned companies as a separate basket. What we look for is themes that cut across all sectors. So what has been exciting for us is, so if there is a energy transition as a theme, or whether it is financials, revival in the economy, those kind of things. Now, if there are players within PSU sector that have the right to win that space, that is what excites us. So, for example, defense is one thing that we were bullish on for the last 3 years. There is only PSU defense as a sector that exists. Private sector is virtually non-existent. So in that kind of a case, absolutely we would buy PSU defense companies. But if you tell me about banking, larger banking companies, then I don't believe that any of the PSU banks have a right to win over there. They are a beneficiary of more a cycle rather than any kind of and the valuation arbitrage existed between the PSU and the private. I think that valuation arbitrage has played out. Now incrementally, I think only a company or a bank that has managed to stand itself apart from the rest of the pack, men and the boys will be separated. So be on the lookout for that.
All right, well, that's quite the valuable insight coming in from Ravi Dharamshi on market moves and market action going ahead. But with that, let's also take you away from the equity markets and what else is happening with the world. Congress signed and sitting Wayanad MP Rahul Gandhi is all set to file his nomination from the constituency today. Ahead of his nomination, Rahul will hold a massive roadshow in Kalpeta. LDF candidate and Rahul's opponent Annie Raja to also file for her nomination today. Well, in the day after getting relief from the Supreme Court, Delhi court likely to mull over conditions around Sanjay Singh's bail. The top court had ordered to release the leader on bail on terms and conditions fixed by the trial court. Well, let's move across internationally then, and British Prime Minister Rishi Sunak spoke with Israeli counterpart Benjamin Netanyahu to demand a probe into a strike that killed British charity workers in Gaza. The UK also summoned Israel's ambassador in London and demanded a thorough and transparent independent investigation into the strike.
And on to some somber news then. Taiwan's strongest earthquake in 25 years has triggered tsunami warnings in neighboring countries. Philippines has issued a tsunami warning and ordered the evacuation of coastal areas, while Japan too has issued similar warnings for its southern regions. Moving on then, in the latest from the Indian Premier League, pacer Mayank Yadav's dream run continues. He derailed RCB's chase against the Lucknow Super Giants to hand Lucknow a 28-run win. The youngster, who clocked speeds above 150 kilometers per hour, won his second consecutive Player of the Match award.
Well, viewers, that's all the time on this edition of Market Cafe. Shreyansi, I and the entire team that put the show together bid you farewell, but you don't go anywhere because the market takes all the action ahead.
If you like this video, then like, share and subscribe to ET Now.